From the morning reading, Wall Street strategists are an optimistic group, and they're not budging. They're looking for another 3% gain through year end, of the most optimistic forecast they've had at the end of October. When they were the most optimistic, stocks tended to suffer from October through December compared to when they were less optimistic. Not a great sign for our current situation. Volatility traders aren't buying this rally. This is the fifth time in the past 3 years that the VIX rose 2% or more on a day the S&P 500 also rose, and short-term volatility expectations were at least 10% below longer-term volatility expectations. And this previously happened in September 14th, 2012, January the 21st, 2014, and August the 25th, 2014, and May the 18th, 2015. Over the next month, the S&P was not able to gain more than 1% at its best point and suffered a loss averaging minus 3.2% at its worst point. So quite a negative reward to risk ratio. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:48 a.m. Central Time, and I'm recording this in preparation for the market day of November the 4th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive into our morning report. And indeed, across all four broad market indices in the United States, they are bullish, but just marginally so. 3 of the 4 are just basically above scratch. You have the NQ, the most bullish, at about 0.25%. Crude oil's up about 0.4%. Euro's down about 0.3%. Bonds are up about 0.25%, and gold is up about 0.33% at the time of this cut. China is up huge, up 4.3%. Hong Kong's up 2.1%. Japan's up 1.3% for a sweep across Asia. Germany down about 0.33%. United Kingdom going the other direction, up about 1%. So kind of mixed in Europe. In terms of the macroeconomic reports for today in the United States, you have FOMC member Brainard speaking. You have the ADP non-farm employment, that's your precursor to the monthly employment report. You have trade balance. You have Fed Chair Yellen speaking. You have ISM non-manufacturing, PMI, and then of course the crude oil inventory report. Finally, this evening, FOMC member Fisher speaking. In terms of tomorrow, and I know this is kind of crunch, but we had a lot of reports between today and tomorrow, and we've got to fit this in. Let's see here. Unemployment claims, the weekly variety. FOMC member Dudley speaking. Non-farm productivity. Unit labor costs. FOMC member Fisher speaking. Of course, the big one for the week is the monthly employment report. That's one of the big 4 reports, and that will be out on Friday morning before the market opens. Let's see here. Let's go to our volatility. And really quite benign. Short-term VIX is down 13.81. Skew continues to remain elevated. We'll talk more about that in just a second. IV percentiles, the S&P is a 9, so going down into single digits. RUT, or the Russell, is an 18. The NASDAQ a 13, and the Dow a 16. No standard deviation moves were put in yesterday by any of the broad markets. And in terms of the regular daily report, still bull flag. We're expecting to see shallow pullbacks and longer bull moves. And it's kind of classic, and so far when you look at the chart for our patterns, this is kind of classic phase 3 action. You notice as we've gone up, slight pullback, shallow pullback, shallow pullback, shallow pullback, shallow pullback. You know, we've just been powering up, and this is now 250 points, so just almost unprecedented, and certainly the biggest move within this time frame in the last 4 years. But this is classic phase 3 activity. Now, when does that change? That's probably getting to be the big question. And you see this red line here. We are starting to run into an area where we're coming into the all-time highs in the S&P. So you have from the top of yesterday's action, we'll call that 2115. So perhaps another 20 points before you hit the all-time highs on the SPX. That could occur in one day for sure. So we're definitely coming into range of the all-time highs. Now, what happens then? The best guess is it does like it's done in the past and rolls over and probably goes into something of at least a retracement. Question will be further then, does it just bounce around and go back into this ranging action, or do we actually make new highs, maybe come back after a new high and retrace back to this area and then take off for another bullish leg? So do we truly go into long-term bullish conditions? And that's beginning to become the primary question out there for technical chartists. Now, obviously, we could just come up to this area and retrace from it, and then the question will be, do we stay in this range? Does this bottom of this range become support? Do we just bounce around in here, or does it roll over and become, you know, something much more dangerous and significant by being rejected and then breaks through this area of support and calls into question, you know, that this is more of a topping action and we're rolling over into a bear market? So two very different hypotheses, and we'll find out as we go forward. In terms of the Russell, of course, we continue to see very bullish action here, but in a relative position much weaker. Notice how this action yesterday basically stopped right at the previous significant swing high area. This is the FOMC wick of 2 meetings ago. And just probed just ever so slightly above that, but closed below that number. So very important there to see where the Russell goes from here. Does it pull back, or does it power through this area of resistance? Next area of resistance for the Russell would probably be around 1225, and certainly it's got a long way to go to catch up with the NASDAQ. In relative terms would already be up here. The SPX would be up here. The Dow would be about this area. So the Russell's got a long way to go, but it certainly has been making a significant move of late. NASDAQ continues to make all-time highs, and you see 3 days in a row we've had all-time highs probed by the NASDAQ. On the Dow, also very bullish yesterday. In terms of VIX futures, nothing really remarkable about that action yesterday. One thing to keep in a close watch on is the dollar, and on the futures contract on the Thinkorswim platform, that's /DX. If this breaks out of this area around 98 and change, that will have a lot to say about where commodities go, the broad market goes, bonds go. You know, this would be a significant tell. So it's up in this upper area. If it breaks this area, look for it to likely make a run, probably not straight line, but to likely make a run back to the 100 area. And if it does that, it'll ripple that effect through a whole host of different markets. In terms of other aspects of our daily report, IBD status remains confirmed uptrend. This is probably probably need to count it, but probably about the longest confirmed uptrend we've had in 2015. The prior 8 confirmed uptrend signals all failed. It remains to be seen as to whether this one actually establishes, real significant gains. Accumulation distribution score for the S&P remains a B, the Nasdaq a C. Remember, breadth on the Nasdaq has been lacking even though it's at all-time highs. GMI index 6 out of 6, buy signal since 1019. That author though remains in cash, in part due to the relative stack of key moving averages, and this also gives us our primary market condition, which remains in a neutral bear. But this continues to improve as you look at the decision points status on stock charts. We've got a number of intermediate term green arrows that came into place, and also on the Nasdaq we now have an up arrow or bullish arrow on the Nasdaq long term. So we've been seeing where the short terms were all green, all bullish. Intermediate term was mixed. That's no longer true. We now have 1, 2, 3, 4, 5, 6, 7 out of 8 are now bullish on the intermediate term signals. And we are starting to see some change roll into the long term. So this continues to improve and recover from the significant technical damage that was done by those August pullbacks. Intermediate term market posture, very bullish posture with the upslope sentiment. Position sizing opinions from both systems is at 100%. The market posture on that intermediate term indeed is very bullish now on all 4 broad market indices. Hedge warning status remains level 0 plus, normal with some elevated risk aspects, though the number of elevated risk aspects are certainly getting to be very, very thin. Primarily, you have this stuff right here where you've got some long-term signals that are still bearish. And then from the lower section, really the only thing left is this elevated skew. There's been, and you heard it in the morning reading highlights about the volatility, and there's an awful lot of hedging going on with this rally. So a lot of disbelief, or at least concern, to the point where people are willing to spend money to buy hedges to protect any gains that are achieved during this bull market. And this skew is a reflection of that. In terms of our regular opinions, no changes from yesterday. Pretty much all go, though as more aggressive positions set up, you might want to consider some defensive aspects, such as legging in, using spreads, still using this 1-to-1 ratio of out of the money, in the money strikes on the covered calls. Also a 1-to-1 ratio mix of higher beta and lower beta positions. So just kind of be smart about this. We are awful far up, and pot odds are that there's not as much room to the upside as there is to the downside with the retracement. So you could find yourself legging into positions and then finding better opportunities to enter your desired position in a few days as you get something of a retracement. So kind of think about being patient and methodical about how you build your positions, but at the same time, it is one of those challenges as you go up straight practically 250 points that you feel like you're being left behind. Well, just because you might have been left behind on this very, very remarkable move doesn't mean that you want to pile all of your capital in at what might become the top, at least in the short term top. So just be careful with new positions at this point. In terms of sector specific, short, intermediate, into long term, pretty much green across most of the places. Consumer staples and utilities being the weakest at this point. One thing I'll mention about retail. Retail, you might want to look at a pairs trade between XRT and SPY. It's setting up pretty nicely. It's had quite a divergence in relative strength of late, given the pounding that this sector took with the action from Walmart and so forth. But you're running into, it looks like Walmart's finding some support. And secondly, you're also finding that this is seasonally a very strong period of time from late October up until the releases at the end of the month about retail sales by specific companies. So you've got a window here of about a few weeks where retail's likely to be relatively strong, and you might be able to make a play on that. Now, don't wait too long to get out, or at least protect or scale out, because once those individual companies start to release, then it starts to ebb in its advantage versus the broad market. In terms of sector specific, fairly good day yesterday. You see consumer staples and telecommunications and healthcare a little bit weaker. Other than that, green, very green on energy, 2.5% yesterday. Look at the 5-day, 8.4%, the 1 month, 12.2%, and it is now even spilled into the 3 month as being positive in energy. So quite a turnaround that's been going on in that complex. And you're starting to see some sectors such as information technology, consumer discretionary, and of course the broad market indice is green across every single time frame that's being tracked here. Okay, I think that's probably enough for today. If you find what you're getting here is helpful to your trading, we greatly appreciate you liking us on YouTube. Subscribe to us on YouTube. We're closing in on that magic first 100 subscribers, right on the edge of that. So love to have you be our 100th subscriber. Pretty remarkable to get there as fast as we have. Stock Twits, Twitter, retweet us to your followers. Greatly appreciate all that kind of support. Email can be sent to support@falconglobaltraders.com. Additional information about special offerings can be found at this website here or at this website here. Just hit the pause button if you need more time to review the details of that. Disclaimers as always, hit the pause button if you need more time to review. And we'll see you back here tomorrow morning for the Falcon Global Market Preview. Good trading.